Uber has stolen $1 million from each and every one of you. See, Uber used to provide a $1 million combined single limit policy. So what does that mean? They combine your liability policy with your policy. So liability policy protects you when you mess up, when you accidentally rear-end someone. Right? You're liable. It is your fault for the accident. So there's a liability policy that kicks in. So the liability policy protects the public. The liability policy is the at-fault driver's insurance. So if you're in an Uber and your Uber driver causes an accident, you're still covered. You're protected. The problem is what if it's someone else's fault? Well, Uber used to have the piece as well. So what is stands for uninsured and underinsured motorists. So uninsured motorists is pretty simple, hit and run. But there's another category of uninsured motorists. Say they have an insurance card, they give it to you, you exchange insurance information, they even give it to the cops there at the scene of the accident. The insurance card is on the accident report. Seems official, right? I get the accident report, I reach out to the insurance company. Turns out this person didn't pay their insurance bill. If you don't pay your car insurance bill, you don't have car insurance. It will lapse. And if they didn't pay it prior to the accident, then there will be, in effect, no insurance. So even though they didn't run, you still have no insurance. That's still the uninsured motorist coverage. But there is a second definition of that's underinsured motorists.
Underinsured motorist means whatever the other guy had wasn't enough.
And so the minimum policy limit in the state of Georgia, for example, is $25,000. In Florida, it's only $10,000. So you're not necessarily well protected. And $10,000, $25,000, that's a lot of money. $100,000 is a lot of money. But medical bills add up quickly. And you'd much rather have that $1 million on top of whatever the other person had than not. And so that extra $1 million was an insurance policy to protect the public. And you know that if you're in an Uber, you're protected. No matter whose fault the accident is, you are in that Uber, you are trusting Uber, you're protected. See, the problem is Uber has now carved out additional protections.
So they used to have that combined single limit policy. They had a tiered policy, right? So the top tier only applied when there was a passenger. Because Uber and Lyft, much like Airbnb, I have Airbnbs on the side. That's why I have that podcast, Once Upon a B&B. Please tune into my other podcast, Once Upon a B&B. It's on YouTube, and we'll drop a link below. My podcast is actually co-hosted with another personal injury attorney and has nothing to do with personal injury. So if you don't want to learn about your rights, I have a separate channel that's just about crazy travel stories and Airbnb host stories, because I am an Airbnb host and Maha is a big traveler. That's my co-host. Let's get back to the law and what the insurance implications are.
The public was always protected by the $1 million policy until March 1st of this year. They didn't protect the drivers after that. The public was protected, the passengers were protected, but the drivers were only protected when they had passengers in the car. So I would always advise to the drivers, hey, you need to get what's called supplemental commercial insurance. So supplemental commercial insurance, also known as rideshare insurance, is really important because it fills in these coverage gaps and it is additional coverage, which we now need for everybody. And so I specialize in Uber Lyft. I have a lot of rideshare drivers as clients, and I advise all of them to carry this supplemental commercial insurance because anyone's personal insurance, it has a commercial exclusion in your policy. So even if you have that insurance, you have that really good coverage, it won't help you if you're driving for Lyft, right? It won't help you if you're driving for Uber Eats or any of these apps because it's that commercial exclusion. So that's why they come in and they protect you while you're driving. But again, they didn't protect you very heavily, but Uber and Lyft were only giving you the $1 million when you had a passenger because it was that PR nightmare. Well, now they've stopped caring about even the passengers. It's crazy to me. It blows my mind how they think they can get away with this. In the old days, prior to March 1st, Uber used to protect us with $1 million, but the drivers, when they were on the way to pick up a passenger, or merely turn the app on, because the moment an Uber driver turns his app on, his personal insurance turns off. Right? So you could have $1 million policy of your own. So Uber drivers would typically have something like $100,000 and then I would advise they purchase supplemental commercial insurance, aka rideshare insurance, and you can stack policies. And so if you happen to get in a car accident, a driver that's talked to me, he or she probably has supplemental commercial insurance, so you won't just have the $100,000 from Uber or Lyft, you would have additional insurance. Uber uses farmers insurance in the state of Georgia. It varies from state to state, But my understanding, and we're verifying this all over the country, is that they're doing this all over the country. Uber is stealing $1 million from you no matter what state you use the app in.
People think that you have to be carried out in a stretcher to have $1 million case. That's not true. If you're actually hurt, I mean, what if you can't work as much? What if you use your body for a living, or maybe it's not traditionally physical, but you do hair and you stand all day and you can't do it as much. You may not be able to work overtime anymore, or maybe you can't even log in the 40 hours, or maybe you have to get put on light duty, and maybe you get passed over on a job, right? There are all sorts of things that can happen with your ability to earn income that needs to be accounted for, not only since the accident happened, but into the future. Well, we have experts that can calculate that and that can testify in court about that. We use life care plan companies. So what that is they have their own physicians that will interview your treating physicians, interview you, so they do interviews and they review your medical records, and all of that per AMA guidelines, American Medical Association guidelines. They're able to calculate your future medical treatment needs, right? If you're not 100% better, if you're going to be living with this injury, there is going to be some future treatment. See, what often happens is within the first couple months, we're able to get an accounting of your damages. So there's pretty much 3 possible options. All right, you get 100% better. That is the goal and that's my hope. But unfortunately, just speaking from experience, that's the least likely of these 3 options. But say you get to the end of that, your initial round of treatment, and we've had what we call a failure of conservative physiotherapy. You've tried, chiropractic therapy, you've tried physical therapy. Maybe you've even had a couple rounds of steroid injections and it's not getting you better. They may say, we're gonna hold off for now. We've got you to what's called MMI, maximum medical improvement. And so that essentially means, I'm not the doctor, they're not ready to recommend any sort of procedure right now. You've been doing your at-home exercises. They'd like you to keep up with that. We're going to circle back in a couple months, check in on you, see if the pain's improved or if it's gotten worse, right? And then they may recommend a procedure. And the third option is we're getting straight to recommending a procedure. Now, you may not be ready for a surgery or, any sort of procedure. And I might add that they have some non-invasive procedures now. For example, a discectomy. A discectomy, you know how your muscles meet in the middle of your back, right? So they are able to separate by the muscle. They stick the needle in there so it's not cutting you open traditionally like a normal surgery. All right, here's my handy herniated disc. So a herniated disc essentially looks like this, right? This is what happens when it's protruding out. This causes inflammation, or this coming out causes pain. And so we need to get that back inside where it's not bothering us. Imagine this is in your back, guys, right? All right, this is causing pain. We don't want this. What the discectomy does is they stick the needle in, right? And then they are taking out a little piece of the matter inside your spine. And so when that piece goes out, that reduces the pressure and that the herniated disc can come back in. That's just, I'm not the doctor. I'm sure that the doctors will do a much better job explaining a procedure like that than I can, but it's just one of the options. So that is just one example of some cutting-edge procedure that you are entitled to if you have $1 million insurance policy, but not necessarily if you have a $25,000 or $100,000 policy.
So what do you need to do next? You need to get insurance as soon as possible. And you need to double check to make sure that you have insurance and that you have the right kind of insurance. You don't want reduced by
But I would recommend even if Uber hadn't done that. is the best bang for your buck that you can possibly get in car insurance, and it doesn't just protect you, it protects your whole family. You got any teen drivers out there worried about them? protects them too, on top of Uber or whatever any other person has. Uber protects them too, on top of whatever that other driver has. But what if it's the question, can I be sued for my teen driver's car accident? Spoiler alert, yes you can.